It's probably hardly surprising, but at this time of year, most accountants' thoughts turns to tax returns. So I thought it'd be an appropriate topic for this week's soundbite. This is a huge topic, and so I'm only going to be looking at income tax returns this week, and in particular, those for individuals. So let's start by looking at who needs to file a tax return, and you'll see coming up on the screen a list of the principal criteria. This is not an exhaustive list, but it covers most of the main criteria. Bear in mind that even though you might not need to file a tax return, you will still need to tell HMRC about your income. The gov.uk website has some interesting tools, and this one will help you to understand whether you need to file a tax return or not. So you've established that you need to file a tax return. When do you need to register for self-assessment, submit the return, and pay the tax? So if you've established that you need to submit a tax return, the first stage in the process is to register for self-assessment. Now, if you start a business in one tax year, then you must register for self-assessment by the 5th of October in the following tax year. The next stage in the process is to file your tax return. Did you know that over 2,000 tax returns were filed on Christmas Day and 600 were filed between midnight and 10 a.m. on New Year's Day? You've filed your tax return, and the next thing is to pay the tax. The headline date is 31st of January following the end of the tax year, but the payment to be made will be net of any payments on account that you've made previously. On the screen, you'll see an example of how payments on account work. The payments on account are always half the previous year's tax. And so in this example, the payments on account are £500 in January 15, £500 in July 15, and then there's a balancing payment in January 16. So let's look at the incentives for you to be compliant. We will be concentrating on penalties because interest rates at the present time are very low. So what happens if you're late? If you are one day late with your tax return, there is a penalty of £100, which is £100 per partner for a partnership return. Daily penalties start at 3 months, and there are further sanctions at 6 and 12 months. So you've submitted your tax return, and next you have to pay the tax. But what happens if you're late? At 30 days, there's a 5% surcharge and a further 5% of the tax outstanding at 6 and 12 months. The tax return is submitted and the tax is paid, but then you discover that there's a correction or you need to update some provisional figures. Don't worry, because if your tax return was submitted on time, you have 12 months to amend it. So what happens if you find yourself in a situation where you can't pay the tax when it is due? As soon as you become aware of the problem, you should contact HMRC and discuss a time to pay arrangement. In these arrangements, all penalties are suspended as long as you keep to the repayment schedule. HMRC like to make it as easy as possible for you to pay them money, so have a look at the gov.uk website for the various ways to pay, including internet banking, debit and credit cards, and over-the-counter at the bank or post office. If things are starting to go horribly wrong, then get in touch. However bad it seems to you, you can be assured that we've always seen worse. Just get in touch, we will put on our armour, and we will fight the good fight against these dragons from HMRC to get the best outcome for you. I hope you've enjoyed our brief review of the issues surrounding tax returns. I am Alan Long from the Long Partnership, slaying your tax dragons and making life less taxing.